Hello guys, this is the Vertical Spread Trading Journal for Friday the 15th of January. My name is David and I'm also known as the Spread Doctor. Today is Expiry Friday. As you all know, options expire on the third Friday of every month, and today is the third Friday of January 2021. So January options expired today. It was a down day on Wall Street today, but it was not a massive sell-off. The Dow was down, the S&P and the Nasdaq were also down, but they were down by less than 1%. The small cap index, the Russell 2000, is the outlier today. It was down by about 1.5%. The VIX on the other hand got a bounce. It got a bounce and it was up by 4.6%. So the VIX was up by about 4.6% to close at 24.34. And the 20 level continues to hold. That 20 level has become a solid floor made of concrete. The VIX above 20 is always good news for selling options, and I had a look at the VIX futures going forward to see what the markets are pricing in terms of volatility over the next couple of months. And the futures for March and April are pricing a tick up in volatility, a tick up in uncertainty and fear. VIX March Futures, the VIX March Futures closed at 26.95. And the April futures close at 27.15. So it looks like the market is still expecting some volatility over the next couple of months. There are now 35 days until the February contract expires, and that means I have 5 days left in my window of opportunity for selling spreads for the February contract. Excluding the weekend and Monday, which is a US holiday, that means theoretically I have 2 days in my window. I currently have 3 open positions for the Feb contract, and I hope to get one more next week, Tuesday or Wednesday. The earnings season for Q4 kicked off today, and the banks led the way. The banks normally are the first ones to announce. Citibank, JP Morgan and Wells Fargo kicked it off today with some solid performances. JP Morgan blew the top and bottom numbers consensus. EPS consensus was around $2.62 per share. That's the earnings per share. They announced EPS of $3.79. So the street was expecting $2.62 and they announced $3.79. On the top line, the revenue was the consensus was for revenue of 28 billion. And they announced a 30 billion. Citibank didn't do as well as JP. They reported EPS of $2.08 versus a consensus of $1.34, so they beat on the bottom. But on the revenue, they reported a revenue of $16.5 billion. The street was expecting $16.7 billion. Wells Fargo was the least impressive of all of them. I think Wells Fargo is still implementing its turnaround program and still trying to clean up its image. They beat the bottom line but fell short on the top line. They reported EPS of 64 cents versus 60 cents expectation by the street, but their revenue was low, the top line. They reported 17.93 billion revenue for Q4, and the street's expectation was for revenue of 18.12 billion. So they fell short by close to $1 billion. All the 3 banks traded down today, with Wells Fargo falling the most. Well, I think Wells was down by about 8% on the day. As we move into the earnings season, the pool of underliers to sell spreads on will gradually diminish, and as I won't be able to sell spreads on companies that have earnings scheduled over the option expiry cycle. This has not been the issue with the Feb expiry or the Jan expiry, but I expect it to have an impact on the March expiry. Moving on to my trade ideas, I had one new trade idea today. It was in ZYME, this one here. That I sold the 45.40 put spread for $1.80. I'll drop a link to the trade idea below. Moving on to my open positions, I now have 3 open positions in NVCR, TAN, ZYME, and I've got a synthetic position in QCLN. I call it a synthetic position because I posted the trade idea. I didn't get a fill, but someone in our trading community got filled on it, so I'm going to cover the position as if I got filled. So the first position is in NVCR. On NVCR, I sold the 140.135 put spread for a credit of $1.06. And a quick note about my NVCR position. So on this position, I only just realized that I got filled on only one contract. So I put an order in for 8, and I thought I got fully filled on the order. But as I was analyzing the P&L today, I realized I only had one contract. So please double check your positions and make sure you got filled for the quantity you wanted on the order you placed. And to check how much you got filled, go to your portfolio tab, this one. You would have a position for NVCR. Firstly, there are 3 formats. You got the new table, the old table, and the dashboard. I'm using the new table, so if you're trying to get the same view that I have, I'm using the new table. So this is my NVCR position. You can see this drop down arrow here. If I click on that drop down arrow, you can see here that I only have one contract. I wanted 8, but I only got filled on 1. I just saw the fill and assumed I got fully filled, but I didn't. If you go to my TAN position, you can see on this one, if I go to my TAN position, on this one you can see I got filled for 8 contracts. So my default is now 8, but on the NVCR I only got filled on 1 contract. So I'll advise you to double check, because I think the liquidity was quite low in NVCR. So please double check your positions just to make sure you got fully filled on the order you placed. So moving on to the P&L for NVCR. The trade, I sold the 140.135 put spread for a credit of $1.06. NVCR closed at what? When did it close? NVCR. So NVCR closed at $167.55. My short put of 140, my short 140 put is out of the money and no action is required. In terms of the P&L on this one, it is pretty straightforward. I have only got one contract, and the open P&L here is $67.50. So the P&L on this position is positive P&L of $67.50. Moving on to the second position, that is a position in TAN. So on TAN, I sold the 105.100 put spread for a credit of $1.42. I think I split my order into 2 on this one. So I sold 4 contracts at 135, and I sold another 4 at 150, and that nets out to an average of $1.42. So on this one, TAN, my short put is 105. TAN closed today at 106.89. My short 105 put is just about out of the money. And that explained the negative P&L, which I'll cover in a minute. TAN was down by some 7.3% today, but with 35 days until the contract expires, I'm not concerned about the big delta move today, and no action is required at the moment on this position. Volatility is to be expected, and that's part of trading spread. It's going to go up and down, but we'll go 35 days for it to settle down and see where it closes. In terms of P&L, I have 8 contracts. The P&L here is negative 700, and that works out at negative $87.50 per contract on TAN. Going on to the third position, which is in ZYME. ZYME, I only just opened this position today, so I'm not going to analyze the P&L. Next week would be the end of week 1. I sold the 45.40 put spread for a credit of $1.80. Let's see where it closed. So ZYME closed at 54.68. I'm short the 45 put. So my short 45 put is currently out of the money and no action is required on this one. On the QCLN, which is my synthetic position, like I said, I'm calling it a synthetic position because I did not get filled in it, but we have a member who has a position on this spread. So we sold the 77.72 put spread for a credit of $1.55. Let's see where QCLN closed today. So QCLN closed at $80.74. My short 77 put is currently out of the money, but QCLN fell by about 5.6% today. Now, no action is currently required on this at the moment, but an area of interest to keep an eye on for this, for QCLN, is around 78.90. 78.90 is an area of interest for the stock. There is a gap that needs to be filled around this level, and there is another gap underneath 78.90. It'll be interesting to see what happens even when the stock does go to 78.90. I'd like to see if the market consolidates around 78.90 or if it goes down further to fill the gap underneath 78.90. So that's something to keep an eye on if you have a position in QCLN. Moving on to my watch list. On my watch list today, I've got a number of items, and I'm fairly confident I should be able to get one more position next week to make it 4. I have got BIDU, ARKG, ARKK, PBW, EDIT, QCLN, LIT, and plug, and I'll quickly go through them one by one. So the first one being BIDU. BIDU currently trading at $238.87. Implied volatility is 78.27, and that's why it made it onto my list. ARKG currently trading at $107.96. Implied volatility 68.5. ARKK currently trading at 141.91, implied volatility 70.4. PBW currently trading at 119, implied volatility 53.6. EDIT trading at 70 or close at 76.14, implied volatility 59.03. QCLN trading at 80.74, implied volatility 86.29. LIT 68.29 was a close, implied volatility 56% even. And finally plug, P-L-U-G. P-L-U-G, $60 stock, implied volatility 56. And that brings me to the end of my journal today. The main highlights for today: Monday is a US holiday, so there's not going to be any activity in the equities or options markets on Monday, I don't think. There are 5 days until the February contract expires, but in all honesty, there are only 2 trading days left, so I'm hopeful to get one more trade idea before the February contract expires. Please check your position in NVCR to make sure you got fully filled. I only got partially filled, and I only realized it today when I was analyzing my P&L. And that's about it. Have a lovely weekend. I hope you enjoyed listening to my journal. You can leave any comments or questions below. Have a great weekend. Goodbye.